Hello everyone, my name is Grega Horvat and welcome to our new week ahead video. So I will take the seat. Blake is away. I think he's in a trip with his family. So I will walk you through the analysis and get you ready for the upcoming week. As you know, my primary style for analyzing the markets is of course the Elliott wave principle, which is not only technical analysis, is also, more importantly, it's the analysis that tracks crowd psychology. Okay, so it's also sentiment, and we know that sentiment and comes from supply and demand, and that's why these repeatable patterns can be very useful. So if you are new to Forex analytics, make sure to check our services. You get for first 10 days access for only $1. So make sure to check this out. Now, we will start presentation with this intermarket analysis. So what we have seen, as you know, US CPI data came out better than expected last week, 5%. So we have seen US dollar coming to the downside, but then at the end of the week, on Friday, we have seen that some of the losses have been reversed, and this came after Fed officials said that there is a need for another rate hike. So US yields came also higher at the same time, while the US notes, as you can see here at the bottom, fell. So more importantly, we have seen stocks still somehow trading sideways within this uptrend, but notice that Aussie Kiwi still remain very weak, while the pound and euro are trying to hold the gains. But if you look from at this correlation from March, since mid-March, actually still think that if we see some kind of a risk of flows, that Aussie and Kiwi could suffer a lot more, okay, because they are looking weak already now, when we still have the S&P 500 trading at the highs. Now, looking at the S&P 500 here, well, the S&P 500 did not break to the upside, even when there were speculations that Fed is going to be on pause. Okay, keep in mind that there is still a banking crisis, so if we have credit tightening conditions, then this actually means that they are trying to slow down the economic activity. So on the other hand, this could help to bring down the inflation, and at some point maybe there is not even need for another interest rate hike. Okay, so keep in mind that if we have credit tightening conditions, of course that's not actually, it's not supportive for stocks, and on the other hand, if you have now also potential another rate coming, because of speculations since yesterday's Fed comments on Friday, well, that's another reason why potentially stocks may not break that resistance that easily. Keep in mind that stocks could much easier break to the upside when you have dovish times, okay, but just maybe on a pause, it's certainly not dovish, okay, and that's why I think that this range may not be broken that easily. Yes, we are trading at the upper side of this range, but if you look here, at this VIX index, you can actually see that we are again moving into this extreme, the lower side of this range that goes back from January of 2022, and always when we reach these levels, what happened? Well, the S&P 500 has seen aggressive turnaround, okay? It's been the case here, and that was back in March 2022, then it was September, October of 2022, okay? Then also it was at the start of 2023. Also then here in February of this year, and now we are again here. So if we consider that maybe yes, there is a new speculations of a further rate hikes because Fed obviously wants even lower inflation, then as I said, there is a chance that we see some kind of a pullback here on the S&P 500. Okay, now from an Elliott wave perspective, again, I'm still observing potential triangle. This is an ABCDE pattern, and looks like that wave E still here can be missing. Okay, we have also seen US dollar coming to the upside yesterday, so if maybe some more gains will be seen on the US dollar, then certainly I would not be surprised if we see some more pullbacks here on the S&P 500. Now, looking at some of the intraday substructures here, we can clearly see 3 waves up here, so resistance may not be far away. Even if we just focus on these short-term cycles with 5 subwaves here within this wave C, well, we can already see that bulls are struggling. We have some overlapping price action here, so clearly this slower price action compared to the previous very sharp price suggests that bulls are running out of steam here and that we could see potentially a reversal. Of course, this broken trend line, the black one, should be broken. Now it's a blue one. And 40.72, 40.96, these supports, if we are going to see push below them, then I think that we could be even headed to the lower side of this range. So yes, it's still the risk on, but the US dollar has reversed yesterday, showing some supports down here, and you have again some speculations for hawkish Fed, and this could potentially limit the upside here. And also we said we have VIX trading at the support, so market is a little bit too confident for this to break higher, and we know that if something is overcrowded, then the most likely the opposite will occur. Okay, now let's take a look on dollar index. Now on dollar index, firstly, if we look here on the big time frames, I'm comparing this rise from 2008 to the one that we have seen from that was back in 1992 to this 2001 highs, and notice that so far the market respected the upper side of this channel and seen a very sharp reversal. I'm not calling for any kind of aggressive long-term weakness here back to these 2008 levels. I just always try to focus on minimum expectations, and that would probably be if we are still going to stay in this channel and we failed at the upper channel line, then obviously I would look now for a retest to the lower channel line, and then let's see what happens there. So far we are also testing this trend line support here. It comes around 100 level as well, so clearly there is some support going on. And looking at the daily chart from an Elliott wave perspective, I'm looking this to be a potential wave B sell-off, could be even wave 5, but in either case I think that there can be some reversal, some recovery coming in. I even have 2 interpretations based on the current price action. This can be counted in 7 swings, like a WXY, and potentially even trying to form a double bottom here. This could cause a very significant rise for a wave C. Of course, if the upper trend line is broken, then we should observe and be ready for more upside. Also, another interpretation here could be that potentially we even completed the 5-wave drop, and we know that even if you have the 5-wave structure to the downside, which is a very bearish impulsive trend, but even after 5 waves, you can expect that market will slow down for a minimum 3 waves. So even this interpretation suggests that we could retrace back to the former wave 4 here. Okay. Also, if we take a look here on the candlesticks formation here on dollar index, you can see that we have the bullish reversal pattern. What is the bullish reversal pattern? Well, let me zoom this in. You can see potentially bullish momentum building up because there was an open, okay, and we have seen a break to a new low, and then more importantly, bulls closed above the previous open. Okay, so this is called a bullish reversal, and it means that even if dollar was very weak during the day, still the most important is the closing price, okay, the most important price of the day. So when you see bulls erasing all of the losses that occurred during the day, it means still that bulls are now in charge, okay, and this could potentially lead to more upside in next week. And in fact, this kind of a bullish reversal or bearish reversals has occurred plenty of times here on dollar index. You can see the bearish reversal that occurred here. So it was an open new high and then close below the previous candle. That goes back to January of this year, and later on we have seen a sell-off. Before that, market stepped into the correction with these bullish reversal candlesticks. Another bearish reversal candlestick has been formed here back in November of 2020, when we have also then later on seen more weakness. And we had a bullish reversal also here in September of 2022, bearish reversal here in that goes back to end of the September of that same year. So clearly, if we respect once again VIX is at the support, we already see some dollar strength here after Fed comments. And with this candlestick formation, well, I just think that maybe there is a little bit of more recovery that can occur here in the near future. Okay. Also, let's take a look on the euro dollar. Now, firstly, the euro dollar, I think that is definitely, it's an uptrend, it's a recovery mode, but I would not be surprised if something more complex again could show up here. I'm potentially counting this as an impulse, and now you're in the middle of this ongoing correction. Now in a flat corrections, you can see that wave B moves into new extremes, and normally you will see that wave B will make only a temporary spike to new high before the bears will step in. And if you take a look closely here on this 4-hour time frame, you can actually see that move from that low to this high can be counted in 3 waves. Okay, more importantly, despite the bulls trying to break this, despite the bulls breaking this 1.1034 2023 highs, we can see that bulls were not been able to hold these gains. We have seen a reversal. So this kind of failure breakout suggests actually, or it's the first warning that bulls are losing strength, okay, and that maybe there is not going to be a straight continuation to much higher prices. I will be watching this lower trendline support, and if this one is broken, then I certainly will look for much deeper correction here. If suddenly, let's say that we break to a new high here, we pass the previous week levels, then of course I still would be looking for potential tops, maybe even with some kind of a wedge formation here. Okay, if I hide this for a moment, maybe even some kind of a wedge here could be building up. So that's for the euro, and also I have the euro index here, which is actually index more equal weighted to some major currencies, and even this one shows potential limited upside. I count it a little bit differently. I see it here in a wave 5, more importantly with the wedge forming. So again, wedge normally suggests that this trend can come to an end, and I would not be surprised again if we see some kind of a reversal here. Now let's take a look also on cable. Now inflation in UK is still high, and there is going to be a new report, new data coming out on April 19. The expectations are 9.8%. Previous reading was 10.4%, so still clearly above 10%. No one wants inflation above 10%, so definitely their central banks has a lot more work to do there, and that's why maybe there was very nice recovery going on pound lately because of these speculations that maybe after all their central bank has to be more hawkish. So it will be very important to see what will be the inflation figures coming out. If there will still be a printing above 10%, then in my opinion this cable will see another push higher here, but until we get this data, I just assume that we could stay a little bit more sideways here. But looking at the whole picture here from 2022 lows, notice that I can clearly count 5 waves up. So 5 waves up suggests that maybe we are in the final stages of this bullish impulse. So nothing moves in a straight line, and I would not be surprised if in the next few months, few weeks, we will see a reversal into a higher degree correction. Before then, maybe later this year, we see a new push higher. So clearly, I think that it's a little bit late to catch some upside here on the pound. Of course, there's still room to maybe to retest these highs from May of 2022, maybe even higher, but clearly there is a fifth wave, so be prepared rather than surprised if we see a reversal here. Now let's take a look on Aussie. Now commodity currencies, as I said earlier, are very weak. Aussie and Kiwi in particular, CAD, Mexican peso, NOK, these are doing much better, probably because they are more linked to crude oil. Now, if we look here on the Aussie, we have definitely a bearish trend. More importantly, I cannot count this rise from that recent 2023 low in 5 waves. It's a free wave structure. And always when you see a free wave structure against the previous very strong downtrend, well, then you can expect more weakness, especially when you have very nice and strong reversal from that wave C resistance target. Keep in mind that wave C can be very similar whenever you are tracking a correction to wave A levels. So I've been observing this as a potential resistance, and we are seeing a very strong sell-off. So in my opinion, there is a chance for much more weakness here. Potentially even we can revisit these levels, these lows from this year, especially if maybe stocks, as I said, would also see some limited upside. Keep in mind that Aussie and Kiwi are already weak now, so if stocks will join this, some kind of a risk of lows. If dollar will stay supported, then I think that this one could fall much further. Looking at the Kiwi here, there was a reversal potentially with the leading diagonal, which is a reversal pattern as well, just not that strong compared to the impulsive price action where you have clear 5 waves without overlaps, but still when you can count 5 waves down, it suggests that there was a temporary top in place. And why I think that we can see more weakness is because this is just now consolidation. Okay, so this consolidation, in my opinion, looks like can be even a triangle with maybe some more choppy price action ahead before we eventually going to see a breakdown into the wave C. However, the higher degree trend here is still bullish in my opinion. We are just tracking a counter-trend movement. So very nice support for this pair this year could be around 0.6 level, psychological level as well. So I'm definitely bullish here on Kiwi. We'll be expecting more upside. Same thing for stocks actually, but I just think that these corrections are not finished yet. Since I mentioned both Aussie and Kiwi, let's take a look here on this cross rate. Well, there's definitely a very strong 5 waves down for a wave A, counter-trend movement for a wave B. Very strong resistance was found around 61.8% from where we have seen another sharp sell-off. Now trying to stabilize here for a bit, but I think that this could be just temporary correction before we eventually see more weakness. So as you can see here, maybe Kiwi will do much better than Aussie in this if we are going to see the risk of loss. Okay, or in other words, if maybe there will be a risk of loss and this Kiwi would really hold this resistance and turn to the downside, then further on Aussie shorts could work much better. Now let's take a look on gold. Now gold obviously came to the downside on speculations yesterday that Fed maybe will really do another rate hike. So looking at the price action, firstly, this daily chart, I think that there's still plenty of room for more upside, but nothing moves in straight line. I think that we could be seeing a new corrective setback. Why I'm saying this, because looking at the 4-hour time frame, by the way, I posted this chart also on Twitter yesterday before this sharp sell-off occurred. I warned that we have potentially 5 waves up, okay, which certainly is the case with the wedge here in this 5th wave. And normally when you see again overlapping price action, despite bulls taking price to a new high, but this overlapping price action, notice that it's much slower, okay, compared to the previous very strong rise. And this suggests that bulls are losing strength. Okay, you have also a divergence here, which confirms the fact that there's not that strong bullish momentum anymore. And normally, when you have a wedge pattern or ending diagonal in this 5th wave, you should be aware of a very strong and opposite reaction. And this is actually what is happening. And I think that if we break this trend line support here at the start of next week, I can easily see prices going much lower, this at least in 3 waves. So I think that we are now stepping into this corrective setback, corrective retracement and corrections, whenever you see 5 waves up like here, well, you can expect obviously more upside, but after an ABC pullback. And so far, that's still only the first leg of this minimum 3-wave correction. And the ideal supports, whenever this correction occurs, is always at the former wave 4. Okay, and also that comes in very nicely here at this previous swing highs, okay, from this year. So this area here could be very attractive for new push to the upside if we are going to see a retest. Also, whenever you are observing metals, it's good to look at this ratio gold versus silver. It tells us if maybe metals are really in a recovery mode or in uptrend or in a bull run, or maybe there's just failure pushes higher, because obviously you want to see silver to outperform the gold. Well, if we are looking here at this daily chart, we can clearly see a very nice break of this trend line that caused this very strong sell-off. But notice this candlestick here yesterday. It looks like there's a doji trying to call a bottom here for a wave 3. By the way, you are also at the 161.8% of wave 1, measured from end of a wave 2. So it's a typical extension target for a wave 3. So again, overextended move suggests that we could potentially see some slowdown here for a wave 4 rally. And if we're really going to see more upside in this wave 4 rally, then obviously that's perfect time for metals to see a pullback. And obviously gold is showing this scenario. Now let's take a look also on dollar yen. So new Bank of Japan governor is not going to make any changes so far to their policy actions. We can actually, it's not a surprise, because if we see here at the bottom, we have Japan inflation coming to the downside. We have the US inflation coming to the downside. So maybe this pair is now going to stay in consolidation for a longer period of time than we think. But eventually, I think that sooner or later, this weakness will resume, because we are seeing a very nice impulsive drop here to this January lows of this year. So I think that this move is now a counter trend. I'm just not completely convinced that it's already finished here, or maybe are we going to see a retest of higher resistance here around 140. The key pivot level is certainly here around 130. Okay, it's been a very nice resistance here, then a support here, then some choppy price action, and again new support here. So as long as we are above that level, we either stay even in a recovery mode or sideways. Okay, but break below that level, I think, could call much more weakness. Now, looking at the 4-hour chart, one key resistance levels that I will be tracking next week will certainly be here around 135.10. It's also the 61.8% of the previous sell-off here. So this clearly is very interesting, very attractive level. I want to see a retest of this level and then let the market do what it wants to do. If we will see a strong sell-off, then I will look for shorts. If this resistance will not hold, just continue to the upside, and this upper channel, parallel channel, will be broken, then obviously I will look towards 140. Okay, also why we should be careful with dollar yen for now regarding the bearish view is certainly because notice the Nikkei here, okay? The correlation obviously is not that perfect always, because it's not only Nikkei and Japanese yen correlation, but it has a dollar yen is obviously a lot driven by the US yield. But still, if we look at some of the recent developments and consolidation, notice that this low here, okay, that goes back to January, to the start of January, was also in the same time when dollar yen found the support. Then we have seen a top on dollar yen at the start of March, when also Nikkei has seen a very strong sell-off. But notice what is happening now. Well, the Nikkei is trying to break this trend line resistance, even potentially coming out of a triangle. So this, for me, looks like a bullish pattern, and that's why I have to be very careful with dollar yen, because if this is really going to progress higher, I think that maybe dollar yen will be trading with it. Okay, especially if the US yields will maybe just trying to consolidate. Okay, also another thing why we should be careful with yen is looking at this some of the yen pairs like euro yen coming out of this triangle. I see easily more upside here. Even pound yen here could be also still in the middle of consolidation, but even this one at some point, in my opinion, could see more upside because I'm tracking a triangle here in this higher degree waveform. Okay, now also if you want, however, be maybe short Japanese yen, maybe watch out for CAD, NOK, and Mexican peso versus Japanese yen because of the bullish crude oil. Okay, I have here this cross, Mexican peso versus Japanese yen, and I can see potentially even completed flat correction here with wave A, sharp rise into the wave B, but still with 3 subwaves that moved close to a new high. Actually, it reached a new high for a few days before market sold off very sharply, and that's a very nice, beautiful example of a flat correction. Or still can be even a triangle here, but in both cases, I think that there is a very nice recovery ahead of us. Okay, so I think that if Nikkei will really break higher, if crude oil will still be in this uptrend, I think that commodity currencies, as I said, like CAD, NOK, Mexican peso could do very well, especially versus Japanese yen. Now, also, the final market will be the crude oil. So we've been tracking crude oil very closely recently. I've been talking about this triangle that called and caused this sell-off for a 5th wave. Then we were looking for limited weakness here, and OPEC announcement to cut the production because they think that demand will decrease is causing even further upside. Notice that market has seen a breakaway gap above the trendline resistance, so clearly we are in new recovery mode. But I think that this recovery could be just still temporary, but could last because we are, by the way, only in wave A of a 3-wave structure. So even if this is going to be a temporary correction, I think that there is even a room for $90, maybe even 100 still this year until this correction is fully completed. However, nothing moves in straight line. We are now at wave A, potentially at the first resistance here. Notice that these current levels go around 83, 84, go back to these January 23 levels. So I clearly think that there can be some slowdown coming. Also keep in mind that this gap will, I think, at some point be filled. Okay, and ideally this will be after the next pullback. And whenever these gaps are filled, there can be, firstly, they are like magnets, and and later on there can be very interesting, very attractive support for a new bounce when the gap is filled, because obviously there are some unfilled orders in that region at that prices. So whenever these orders are executed, that's what changes the the change in flows. That causes a change in flows, and this could potentially lead to, again, new reversal in the market. So whenever we see this potential pullback here into the wave B, I think that more upside could be seen. In fact, I have even an alternate count here, another one, which suggests that maybe there's still going to be just a wave 4 pullback, and that wave A will fly even higher, but it's the same situation. After the gap is filled, I think that more upside will be seen here on crude oil. Traders, thank you very much for your attention, and I hope that you enjoyed this presentation, and again, talk to you next time. Bye.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.